We are jumping straight into something today that is actively rewiring the financial sector. And it's happening almost entirely out of public view.
Yeah, behind closed doors mostly.
Exactly. But if you follow fintech, regulatory frameworks, or honestly, even if you're just paying attention to how your personal data is moving through the banking system, you really need to hear this.
You absolutely do.
Welcome to the Deep Dive. Our mission today is to unpack a highly critical industry brief we've got in front of us. It details a massive regulatory shift, something experts are currently calling a three-way compliance storm.
Which is, frankly, a pretty accurate description of what's happening.
Right. We are looking at this giant stack of new mandates that just dropped, and it outlines this rather urgent, structured response the industry is just scrambling to piece together right now to protect your data.
And, that word urgent really cannot be overstated here. I mean, we are looking at a scenario where the entire operational foundation of modern banking is being forced to evolve, practically overnight.
Okay, let's unpack this. Because we hear about new regulations all the time, right?
Sure, constantly.
Like, compliance is practically the baseline state of existence for a bank. So what makes this specific moment a storm? What exactly hit the banks in the last 30 days?
Well, it's the convergence. It's the timing. In just the last month, the Reserve Bank of India, the RBI, issued two sweeping directives at the exact same time. You've got their comprehensive AI guidelines and their data governance guidelines.
Two massive drops at once.
Exactly. Now, either of those on its own requires, a multi-year IT infrastructure overhaul. But banks are currently in the middle of a frantic sprint to comply with a third overarching mandate.
Ah, right, the Privacy Act.
Yes, the DPDPA Act, the Digital Personal Data Protection Act, along with all its accompanying rules.
So they are getting hit with AI governance, data governance, and extreme data privacy laws at the exact same moment.
Precisely. And it's not just the sheer volume of the regulations that is causing the panic. It's the intense internal friction between them.
Dealing with one regulation is a headache, but three at once. It sounds like a logistical nightmare. It's like trying to change 3 tires on a car while it's still driving down the highway at 80 miles an hour.
That is a very good way of putting it. It's incredibly dangerous.
But I do have to push back a little here. Why are banks finding this so challenging? I mean, shouldn't data and tech compliance be standard practice by now? They have endless resources for this.
What's fascinating here is that it's not just about standard practice. It's the sheer compounding weight of dealing with all three simultaneously without a unified blueprint.
See, that's where my head goes immediately, because I'm looking at these 3 mandates in the brief, and they just don't look like they play nicely together at all.
Oh, they actively fight each other.
Right. If we look at the DPDPA, the entire philosophy of that act is data minimization, isn't it? It's about strict purpose limitation. You collect only the data you absolutely need for a specific transaction, you lock it down, and you get rid of it when you're done.
Exactly. Keep only what you need for only as long as you need it.
But then you look at the RBI's AI guidelines. Artificial intelligence is fundamentally antithetical to data minimization.
It is entirely hungry for data. I mean, it requires vast historical, unstructured data sets just to train its models, spot patterns, and function effectively.
So how does a bank actually function under both mandates? Like if a bank is running an AI model for real-time fraud detection, which is essentially mandatory nowadays.
Right, you can't run a bank without it.
That AI needs to analyze millions of past transactions to even know what fraud looks like. But the privacy law is standing right there saying, hey, you can't keep that customer's transaction history indefinitely.
And you definitely can't feed it into a black box learning algorithm without hyper-specific consent.
Exactly. That sounds like an impossible paradox to me.
You've hit on the exact reason the industry is in shock right now. It is a paradox. If you strictly follow the privacy mandate, your AI fraud detection gets starved of data.
And then you suffer massive financial losses from cybercrime.
Exactly. But if you feed the AI the data it needs to protect the bank, you violate the DPDPA and face catastrophic regulatory fines. You lose either way.
Wow. And where do the RBI's data governance guidelines fit into this wrestling match?
Well, that is supposed to be the referee, right? Data governance is the set of rules dictating how a bank categorizes, stores, and grants access to information.
Okay, so immediates.
In theory. But trying to build a governance framework that seamlessly mediates between a data-hoarding AI and a data-destroying privacy law, all while the bank is actively processing millions of live transactions every hour.
Yeah, that sounds like an architectural nightmare.
It is. They don't just exist in silos. They actively conflict.
Which begs the question, how do they let it get to this point? Because large financial institutions usually see these regulatory waves coming from, like, miles away.
You would think so, yeah?
They have massive compliance departments, they lobby, they form committees, they build a smooth roadmap over 3 years. But the brief we are looking at paints a picture of absolute chaos and sudden urgency. What catalyzed this?
The catalyst was the Bank of Baroda data breach.
Oh.
That was the inciting incident that took this from a theoretical future quarter problem to a 5-alarm fire today.
We really need to look closely at that breach, because the timing of it seems to be everything here. It didn't just happen in a vacuum.
No, it happened exactly during this messy transition period, and that's why it acted as a massive accelerant for the entire banking sector.
How so?
The breach exposed a critical reality for these banks. The vulnerabilities don't just exist in legacy systems. The most dangerous vulnerabilities exist in the gap between the old systems and the new, half-implemented regulations.
Oh, wow. So it proved the threat wasn't just some hypothetical scenario drafted by a regulator. It was active exploitation.
Exactly. When a major institution suffers a breach while trying to juggle AI integration and new data privacy laws, every other bank suddenly realizes that a slow, bureaucratic rollout of compliance is a luxury they just don't have.
Right. It became an immediate necessity for survival.
Yes. The window for internal debate just slammed shut.
But here's where it gets really interesting. You would assume the knee-jerk reaction from bank executives would be to instantly mandate total compliance. Just slam the door shut, right? Like, implement the RBI guidelines by Friday, no exceptions.
Which would result in immediate operational paralysis. I mean, you can't just mandate a philosophical shift in data architecture overnight.
Exactly. The source notes that banks came to this really sobering realization. Before they could even draft a viable action plan for compliance, they had to establish a foundational awareness program.
Yes, that was crucial.
Because if the IT department is building an AI algorithm, and the legal department is interpreting the DPDPA, and the C-suite is pushing for data governance.
And none of them share the same operational vocabulary.
Right. Any compliance framework they build is going to just collapse under its own weight.
You can't enforce a rule if the people building the systems don't understand how the rule interacts with their specific domain. The industry realized they were stuck.
It needed a map.
They lacked a unified blueprint to map out how AI, data privacy, and data governance actually interface on a technical and operational level. And inventing that unified blueprint from scratch inside every individual bank.
It'll take years.
Years they simply didn't have.
Which brings us to the intervention, because this vacuum of guidance is where we see industry bodies stepping in. The brief details how FDPPI, the Foundation of Data Protection Professionals in India, recognized this sector-wide paralysis.
Yes, they saw the gridlock.
And they effectively built the blueprint for them.
They engineered a highly structured modular solution, and modular is the key word here. You know, FDPPI didn't just release a 1,000-page master document and wish the banks good luck.
Nobody reads a 1,000-page PDF.
Exactly. They broke the solution down into distinct interlocking frameworks designed to specifically address the three-way storm we just talked about.
Let's get into the architecture of this, because understanding these acronyms is critical to understanding how modern banking infrastructure is being rebuilt right now. Break it down for us.
It starts with the foundation. FDPPI developed the core framework called DGPSI Banks.
And what does that stand for again?
That stands for Data Governance and Protection Standard of India, specifically tailored for banks. This is the bedrock layer. It translates the broad legal text of the DPDPA into actual operational standards for a banking environment.
Okay, so DGPSI Banks is the core architecture. It defines how data is legally collected, stored, and minimized across the whole institution.
Correct. But as we discussed earlier, the core architecture alone can't handle the complexities of machine learning.
Right, the AI paradox.
So to address the RBI's AI guidelines, they developed the AIGSI, the Artificial Intelligence Governance Standard of India. And the brilliance of the AIGSI is that it is not a standalone document.
Oh, it isn't?
No, it is explicitly designed as a supplement that attaches directly to the DGPSI Bank's core framework.
Okay, so it's not a competing set of rules.
Right.
It inherits the privacy baseline and builds on it.
Exactly. And alongside that, they built a specialized data governance framework, acting as another vital supplement to manage the specific routing and access controls between the AI systems and the protected data stores.
It's basically like building a computer. DGPSI Banks is the motherboard. It's the foundational piece everything else connects to.
I like that analogy.
And the AIGSI and data governance frameworks act as these essential plug-in cards. like a graphics card and a sound card. They plug right into the motherboard to run the whole system safely and handle those specific heavy tasks.
Yes. It's an elegant systems architecture approach. You have to build the foundational motherboard, the DGPSI, before you plug in the high-speed processing of the AIGSI.
Because if you try to run the AI without that localized governance attached to the main privacy laws, you get a catastrophic failure.
Which is exactly what the Bank of Baroda incident hinted at. FDPPI's modular structure forces banks to systematically secure the data environment before they allow AI to start ingesting anything.
But having a framework at the corporate headquarters is one thing. This introduces a massive logistical reality check. Because all of this, the core frameworks, the supplemental standards, it all sounds fantastic when it's being discussed by chief information security officers in a glass boardroom.
Sure, where they have dedicated server floors and enterprise-grade firewalls.
And teams of cybersecurity analysts. But how does a bank ensure compliance across every single local branch? The corporate headquarters is only a tiny fraction of a bank's actual footprint.
This is where regulatory theory historically falls apart. And it's exactly why FDPPI created a specific adaptation.
Right.
The brief highlights a framework called DGPSI Bank Branch. It is a localized, stripped-down adaptation of the core framework, explicitly designed to address the special needs of banks with a huge network of branches.
But wait, why do we need a separate sub-framework just for the branches? Doesn't the main framework cover the whole bank? Like, if the CEO signs off on a strict data privacy mandate, shouldn't those IT protocols just apply uniformly down to the local tellers?
If we connect this to the bigger picture, you have to look at the reality of decentralized banking. A top-down corporate IT policy cannot govern physical, decentralized human behavior.
Okay, I'm listening.
The threat vectors at corporate are largely digital, right? External hackers, ransomware, sophisticated phishing. But the threat vectors at a local branch, they are highly physical and localized.
Give me a concrete example of how that differs.
Let's say you walk into a small local branch to apply for a business loan. At corporate headquarters, customer data is an encrypted string of text in a secure database. But in that local branch, your data is a physical PAN card you just handed to an employee across a desk.
Oh.
That employee might be working on a shared terminal. They might have a personal smartphone sitting right next to the keyboard. They might take a quick photo of your financial documents to text to a regional manager just to expedite the approval.
Wow, yeah. A corporate firewall can block a Russian hacker, but it can't stop a local loan officer from taking a picture of a sensitive document with their iPhone to get a faster sign-off.
Exactly. Corporate policy might dictate encrypt all data at rest. But DGPSI Bank Branch dictates how do you securely digitize a physical ID card, feed it into the new AI-assisted loan evaluation software, and ensure the local terminal doesn't retain a shadow copy, all while the customer's sitting right there.
It translates abstract data governance into actionable physical workflow rules for branch employees. It scales the massive compliance storm down to the actual physical reality of the front lines.
Precisely. It bridges the gap.
Which brings us directly to the human element. Because a framework is just a piece of paper, unless the people actually know how to use it.
It's just a PDF on a server.
Right. A PDF does not secure a financial institution. This brings us back to the vital awareness programs we mentioned earlier. You can deploy the DGPSI Bank Branch protocols to 1,000 locations, but unless the people sitting behind the desks actually understand the why and the how, the protocols will just be ignored the second the lobby gets busy.
Which is why FDPPI and Nalavi, the data protection consultancy partnering on this, aren't just publishing the standards. They are heavily invested in the implementation phase through specific training regimens.
Turning frameworks into action.
Yes. The brief details two very targeted 2-day training programs currently being rolled out to turn these abstract frameworks into operational reality.
Let's break those down. The first one listed is the Certified DPDPA Champion Bank Branch Program, or CDC Bank Branch. I have to say, I really love the term champion.
It has a good ring to it, doesn't it?
It does. It doesn't sound like
On a Tuesday afternoon, they are auditing the localized workflows. They are the person who notices that a teller has left a terminal logged into an AI customer service tool while walking away to grab a coffee.
catching the human errors.
Exactly. They are the person who ensures that when a new customer is signing onboarding documents, the branch is actually capturing the granular, specific consent required by the DPDPA, rather than just pointing to a generic sign here for terms and conditions box.
So they are The human governance layer, ensuring the AI doesn't ingest data it shouldn't at the point of entry. They enforce the DGPSI bank branch framework in real time.
Spot on. And the second program mentioned is broader, titled Data Governance and Protection in Banks.
Right. How does that one differ?
While the Champion program targets the grassroots, decentralized branch level, this second two-day program targets the institutional level. It's designed for the operational managers, the IT staff, and the compliance officers.
The people who need to understand the macro interplay between the AI-GSI plugin and the DGPSI core.
Exactly. They are attacking the awareness deficit simultaneously from the bottom up and the top down. Because if the local champion doesn't understand the rules, the data gets compromised at the source.
But if the operational managers don't understand the frameworks, the entire architecture fails at the macro level.
Exactly. You need both to survive the storm.
So what does this all mean? If you step back and look at the totality of this briefing, it reads like a massive flashing warning light for the entire banking industry.
It really is.
The storm isn't approaching anymore. It has made landfall. The RBI guidelines are active. The DPDPA is looming over every single transaction. The Bank of Baroda breach proved that the vulnerabilities are active and being targeted.
The window for passive observation has permanently closed.
The brief is essentially a call to arms for interested banks to contact FDTPI and AVI immediately. It's a mandate to get their staff into these specific two-day training programs before they become the next headline.
The active compliance phase has been forced upon them, and the only way out is through structured, accelerated training.
And for you listening, this matters immensely, even if you never read a single line of regulatory text in your life.
It impacts everyone.
We rarely think about the invisible plumbing of our financial systems until a pipe bursts. But every single time you apply for a credit card, deposit a check, or let a bank's algorithm analyze your spending habits to offer you a better rate, your most sensitive, irreplaceable personal data is in play.
And it's vulnerable.
Exactly. Your financial safety in this rapidly evolving technological landscape relies entirely on the banking sector successfully navigating this exact three-way compliance storm. They're having to redesign the airplane while they're flying it at maximum speed.
But this raises an important question. A look ahead, if you will.
Oh.
We've spent all this time discussing how banks are frantically training human beings, these certified champions, to manage the incredibly delicate interplay of AI, data governance, and privacy laws. But AI technology is advancing exponentially.
Well, they're getting smarter every day.
So, if the mere introduction of AI into banking is already requiring its own massive supplementary governance standard, the AI-GSI, just to ensure it doesn't violate basic data protection today, what happens tomorrow?
What do you mean?
What happens when these AI systems become so complex, so deeply integrated into the bank's architecture, that a human being simply cannot process a volume of compliance decisions required in real time?
Oh, wow.
Will human champions at local branches still be capable of governing the AI? Or are we rapidly approaching a threshold where we will be forced to rely on highly specialized AI systems to govern the compliance of the operational AI systems?
Wow, that is the logical endpoint, isn't it? If the technology is moving faster than human oversight can manage, eventually you need a machine to audit the machine.
Precisely.
We're building frameworks to control AI today, but we might just be laying the groundwork for an ecosystem where AI is the only thing capable of enforcing the DPDPA tomorrow. That is a fascinating and honestly slightly dizzying thought to chew on.
It's the next storm on the horizon.
Well, thank you so much for joining us on this deep dive. The next time you log into your banking app or hand over a document at a local branch, just remember the immense, unseen frameworks, the clashing regulations, and the human champions working frantically behind the screen to ensure your data survives the storm. Until next time, keep questioning the world around you.